Hey everybody, welcome back to Ryan Makes Sense, where we talk personal finance, investing, and chart analysis. Today we are looking at ticker symbol HCK. This is Hackett Group Inc. We're going to go ahead and see if this stock should be worth $22. We're going to see what institutions and hedge funds are doing, and we will look at the balance sheet, see what the assets and liabilities are like, and also chart out the support and resistance. So without further ado, let's go ahead and jump on in. So, just looking at this stock, it's kind of been trading in a range. So we had our first range from about end of 2015 to 2021. And I'm just gonna draw here. Now we're in another range up here. Basically, well, this one kind of goes down further. So we're trading in these really, I wouldn't say tight. We're trading within these ranges for 5 years before making a move, going back down. Wow. So if you had bought this stock at the end of August 2008, you would not have broken even until 2013, August 2013. So 5 years. Wow. So that really traded in, again, another 5 year range. What am I talking about? Actually, longer. So this thing likes to consolidate for 5 years, really before legging up, consolidating, legging up, consolidating. So let's go ahead and run some numbers and check things out. Strength, pretty neutral. Momentum, again, neutral. Money flow, neutral. Relative momentum is actually going down. So let's look at our box. Yeah, there's some more leeway to the downside. I can kind of see a bear flag here. And we have our flagpole basically from this high candle to this low candle and kind of trading up and to the right. The next move down will probably be a leg down to around $20, 2060. So no real major concerns. This stock does pay a dividend, which is nice. Let's just take a quick peek. In the future, this stock is a little bit undervalued. Quick ratio is over 1. We love to see that. Debt is nice and low. EPS past 5 years, solid. Sales past 5 years, solid. Gross margins, very high. Anything over 30 is pretty much high growth margins. Anything over 38 is like high growth, yeah. So 38 is good. Short, or not short, low float. The volume's pretty light, but I think that's okay. I'm gonna open up this company. I want to see what their website looks like. But let's go ahead and run our calculation here. We're not going to include the market cap because it is not over 1 billion. So let's go ahead and just make some updates here. All right, so income is they're profitable, 34,720,000. One more zero is needed. No. 34,720,000. Sales, they do 302,550,000. Good for them. Going down to their cash, and I just want to take a peek also while we're down here, what their quarterly data looks like for 2024. So they did 77 in Q1, 77 million. Last year they did 71, so about almost a 10% increase year over year, which is fantastic. Good for them. And if we look at Q2 2022 and Q2 2023, slight decrease. Q3 2023, sorry, I got that wrong. Q2 2022, Q3 2022, slight increase. Q3 2023, again, slight increase from 2022. Q4 from last year, again, a slight increase. So they're increasing year over year, which is solid. Okay, so we're gonna look at their cash. They have 12 million, come on, 960,000 cash. Debt, 31,410,000. Too many zeros, too many zeros. Okay. Just really quickly, 179 million in assets, 85 million in liabilities. Assets dwarf liabilities at least 2 to 1 here. So for every liability, they have 2 assets. That is what we like to see here. That's great. Um, and their debt is going down over time, which is great. Assets are slowly coming down. Total current assets slowly coming down. Cash, they're pretty low on cash historically, actually. This is the second lowest cash they've had on hand in the last 2.5 years. 2 years? Yeah, last 2 years. Um, so yeah, back up here. And we're going to go ahead and take this and divide it by 24,750,000. This is the $12.90 stock, trading at $22, which is a little crazy. Yeah, I mean, everything's right. Their debt was 31 million, right? Yep, 31 million. Yeah. So this is overvalued. I would wait for this to come down a little bit more. Let's see what institutions and hedge funds are doing here. HCKT. Institutions own 80.66%. And also, just really quickly, my calculation did not incorporate that they're giving some of their cash out. So this $12.90 should actually be slightly less because they are giving some of their cash out to shareholders as a dividend. So I think this went from pretty overvalued to decently, almost severely overvalued in my opinion. Institutions, old data 80.66, new data is 92. 12% increase in institutional and hedge fund ownership, which is pretty cool. Vanguard increased 15%. Trigran investments increased by 4%. BlackRock decreased. Royce and Associates added 1.4 million. Yeah, I would maybe just wait this out. It does appear to be a bear flag. Let's just see what we got. HCKT on my charts. I've charted this one up before. That's great. So let's see. Oh, perfect. Look how it's. I love Fibonacci arcs, and you guys, if you've been following me, look at if this falls, it's gonna be in a danger territory. This is perfect resistance right up here, perfect support here, perfect resistance, perfect resistance, perfect support, perfect support, perfect resistance, perfect resistance, resistance. This is fantastic. My future self is thanking my old self for doing this. So I think we will see, I think we'll get lower than 12. I think we will get 15. No, that's not lower than 12. I would say watch out for support here. We have here, here. Yeah, so just watch out for this one. If it does fall out of this Fibonacci arc to the downside and this slightly tilted ascending triangle, ascending wedge, it is a bullish, or I'm sorry, it is a bearish pattern. Also falling out of the Fibonacci arc could be pretty detrimental to the stock price. So we're going to create an alert on this one and we're going to watch it under $16. All right. That was pretty good. And let's just see what this company does. So typically, I don't mean to crap on anyone's day or if you're a big investor in this, but if someone were to hand you a portfolio or a spreadsheet or a packet of saying, hey, this is why you should invest in my company, and they let you know, let's just see. They let you know that their quick ratio is over 1, institutions and hedge funds are adding, gross margins are high, debt is low and being paid off fully. And then you get to the share price, the calculation of the share price, and it comes out to like $12. You're probably going to say to your friend, hey man, you probably want this to be in the best interest of myself. I know you want me to look at your company, but I think your stock is overvalued. We've got these technical indicators that I'm looking at. I'm just going to give it 6 months to a year. Let me revisit then because I might be able to make it more reasonable and make it make sense in my end. So typically, and that's without even knowing what the business or opportunity or service is. So everything else is kind of fluff. So this could be like the best company world. This could be Nvidia's next big thing. But if the numbers don't make sense, it's kind of like it defeats the purpose of whatever. Like what else? So it's like, okay, I'll pass on this, but I'll come back and check. It gets emotion involved. So this company is AI strategy operations, finance, human capital, sourcing, procurement, IT company. It's kind of like a all things in one, headquartered in Florida. I did have the website open. I actually did want to check it out. Whoops, whoops. So let's just check out the website really quick. But if we get like over induced into like the ins and outs and the oohs and the ahs and oh, it's AI, it really takes away from the hard facts of, hey, this is a bearish pattern. The stock cannot close above it. We're in a bear flag. We're coming to the bottom of our Fibonacci arc. At least give it 6 months. At least. The website. Here we go. All right. Looks like a WordPress site. Let's just accept all cookies. Why not? Okay, so this company again, it's a all-in-one type company, AI, procurement, IT, yada yada. I just want to see down here. Okay. Let's see who they use for their positions. Third-party vendors are always good because it shows that they're invested in finding quality candidates. I think Workday is the creme de la creme in terms of managing applicant tracking system. So while that loads, I would hope to see a lot of sales positions for this company. This is a really big website. All right, so here's their partners: Amazon, GE, GSK, FedEx, Zeneca, Norwegian, Royal Caribbean, Moderna. I mean, these are all huge companies. And again, I just want to see if they're upping their sales or they have a lot of sales positions because they need it. Okay. All jobs. Let's just do all jobs. Analysts, data jobs, trainees, consultant. Be the first to apply. Be the first to apply. Be the first to apply. It looks like this company is not getting much love in terms of applicants, I guess. I don't know. Or this could just be incorrect because this is from March and we're now in July. So, yeah. Anyway, that's my thought on this company. Give this at least 6 months. I think we're going to have a really big tell here. I think we'll see what's going to happen for sure in the next 6 months. Maybe $15, maybe 12. We're going to find out. Anyway, if you made it this far, thank you so much for watching. Consider subscribing. Have a great day. Goodbye.